Hello everyone. In this video, we are continuing with this chapter and we are practicing activity 9 together. Again, this is a full working of your consolidated statement of financial position. So let's get on to this particular question. The ultimate requirement which we're supposed to answer is we're supposed to prepare the consolidated statement of financial position for the group of for the year ended 31st December 20x0. What all information is given to us? Let's have a look. P company acquired 80% of the share capital of the subsidiary on 30th of September 20x0. So it's a mid-year acquisition because the year end is 31st December. Uh, P company exchanged one share in P company plus a cash payment of zero point 0.3 for one share of the subsidiary. On 30th of September 20x0, the P company's parent company share price was $1.5. Subsidiary companies' share capital throughout 20x0 was 2 million shares, and the profit for the year was $280,000. Fair value of the subsidiary company's land and buildings on 30th of September was 250,000 more than the value shown in the accounting records. Fair value of the non-controlling interest at the date of acquisition was 810,000. So we are being given with the statement of financial position for both of the companies, P as well as S, and then we are supposed to prepare the consolidated statement of financial position. So here we are solving activity 9 together. This is the requirement that we are answering. So what we can do is we can prepare the format. We've been asked to create the group statements. So what we can do is we can prepare the format over here. We have assets. We have the non-current assets. Within those, we have tangible NCA, investment and subsidiary is not going to appear. Tangible NCA. And then we are going to have our current assets. And then we will find out the total of our assets, total assets. And then we are going to proceed with the equity and liabilities section. So equity and liabilities. First off, we will start with equity. So with equity, we have the share capital, share premium, share premium, and then we have the retained earnings. Total of this gives me the total of equity. And then I will be calculating my current liabilities and I will be putting them over here. These are my current liabilities. And then I will find out the total of my equity and liabilities. So total equity and liabilities, which should match with my total assets, right? So this we have created our format. Now we will do the stepwise working as the steps that we have learned in the chapter. So the first step that we are supposed to perform is find out the total of the assets and the liabilities. So we will take all of our non-current assets first at the fair values. So these are the values 187403110. However, it was telling me that the value of the land and building of the subsidiary was this much more on 30th September than it was shown in the accounting records. So what we will do is 18,740 plus 3110 plus 250. 18,740 plus 3110 plus 250. So this is the total of the tangible non-current assets that we will be showing. Then we will do the same because there are no inter-group transfers, no information has been given. So we can take the receivables and payables as it is. So current assets will be 3320 plus 640. 3320 plus 640. And then we can do the same for the current liabilities balances also. We have been given with 2490 and 380. 2490 and 380. So these are the totals that we will be showing. This is the first step that we have done. Then the second step is we are supposed to insert the reserves of the parent. So the reserves of the parent means equity as well, the share capital as well as the share premium. So the share capital is 6600. And then the premium is also given to us as 1280. So we will enter this particular value. So this is step 2 done. Then we have learned the third step is to calculate our goodwill. Now we will do the working of the goodwill. So for the working of the goodwill, what all is the format? I'll just bring in from the previous example. This is the format for the working of the goodwill. So I'll just paste it over here. Okay. So firstly, fair value of non-controlling interest is directly given to me. So I will take that as it is, that is 810. Then I will take the fair value of the net assets at acquisition. Net assets at acquisition are going to be my share capital, which is 2 million number of shares. Then I will be taking the pre-acquisition profits, and then I will be doing the adjustment of the land and building. So firstly, 2 million as it is I'm taking, because we are doing our workings in thousands. I'm removing 3 zeros from the million. So 2 million plus I need to add the revaluation of land and building, which is 250,000. And I also need to add the pre-acquisition profits. So the pre-acquisition profits are not directly given to me. I will have to do some working. This figure, that is, these statements are given to me for the 31st of December 20x0. That means the retained earnings over here also include the profit for this particular year. So what I will have to do is, this is the value of the share capital plus the revaluation of my land and building. Then what I will do is, um, the reserves which I have with me, 1370, they include the profit of this year. Profit of this year is how much? It was told to me that the profit for the year was 280. That means this much part of the reserve belongs to me before the acquisition. So I will add this value 1090. Then what I will have to further add is, because this acquisition is done partway through the year, it is done on 30th of September, this year's profit, whatever has been earned before the acquisition, that will also be added. So what do I have to do? Profit for this year is given to me as $280,000. From this figure, I need to take whatever pertains to before the acquisition. So I've done the acquisition on 30th of September. So how many months are left? October, November, December. That means 9 months profit is included in the value at the acquisition date. After acquisition, 3 months of profits have been earned. So I will take into 9 by 12 of this particular number. So 210 is what I will further add, and this will give me the net value of the fair value of the net assets on the acquisition. Then I have to calculate the fair value of my consideration. With respect to consideration, I have paid one share of 1.5 plus 0.3 extra. That means per share I have paid 1.5 plus 0.3. This is the price that I've paid for one share. And how many shares have I taken? 2 million into 80%. So into 2 million, removing 3 zeros again, into 80%. So this is the value that I have paid, fair value of my consideration. Now I can easily calculate my goodwill. Goodwill is going to be the difference. So it is going to be $140,000 that I will be recording as the goodwill. Then this is the third step that we have done. Now let's calculate the fourth step. Fourth step is to find out the value of the NCI. So fourth step is value of NCI. So when it comes to our NCI, we will take the value that was there before the acquisition. On the acquisition value was given to me at 810. To this, I need to add the profit that they have earned this year after the acquisition. So I will take 810 plus the profit which pertains to this year. Profit which pertains to this year is 280,000, and I have to take 3 months of it. So into 280 into 3 by 12, and the subsidiary, the non-controlling interest owns 20% of the company. So I will take 20% of this value. So this is what will the value of NCI will look like at the reporting date. Then the fifth step will be performed now. The fifth step that we have learned is to calculate the retained earnings. So the parents' retained earnings are taken as it is. Parents' retained earnings is this particular value over here. Then what do? We add the parent share of the subsidiaries assets. So the retained earnings which we are going to include here, it is going to be as it is the parent's value, which is 14,750, 570, Plus, we will take the parent share of the post-acquisition profit. So post-acquisition, they have earned 280 into 3 by 12. And of that, 80% belongs to our parent. So this is what we are going to take till here. So the total of the retained earnings is going to look like this value for the company. So this is the fifth step that we have done. Now let's move to filling in the balance sheet. So we have already gotten the total of our tangible non-current assets as 22,100. Here we will also be putting in the goodwill, which we have just calculated at the bottom. We can even link it to the scenario. This is our goodwill calculation. 140 is the goodwill's worth. So now we will be calculating the total of our assets, which will be the sum from here till here. So this is the total of the assets for the group as a whole. Now we will move to the equity and liability segment. We have already filled in some figures, the share capital, the share premium. Retained earnings is already fixed. So now we can put in the total of the equity, which will come around to this value. And then here we will add the non-controlling interest. Non-controlling interest, we have also worked around over here. This is the value of the non-controlling interest. We have our current liabilities. Now we can just do a total of all of these things, total of all of these numbers together. This plus this plus this, which is going to give you 26,200, which is the exact total that you were getting for your assets. So with this, we have solved activity 9 together. I hope that this was useful. I hope that you tried this before and then you watched this video. If you have any difficulties, please feel free to reach out to me. In the next video, we will move to the next activity together.